think this is going to work. Hold on. All right, Libby, think we're live.
Yes, we are. Woo woo.
What's going on?
You know, the
What are
sun
you
is
doing up
shining.
there?
The sun is shining. It's so exciting.
Well, I appreciate you joining me today. And just to give everyone an idea of who we are, because I know a lot of you follow us over on the Wheelock Group page, and I'm Jason Wheelock. Hello to all of you that do know me and possibly listen to our podcast each week with Lee Taylor, who actually just left because we were recording this afternoon. He had a mask on. It was pretty funny. And that's Due Diligence. So look that up on Apple or Spotify. And we just had a really good one that we just did. So you should check that out too, Libby. But I wanted to bring you on today to the show or on to a Facebook Live event. This is the first time we've ever attempted to do Facebook Live on the page. Not only on the page, it was the first time I've ever done it with somebody in a different place.
I love it.
So anyway, I was so desperate for your info about the mortgage world and what the hell is going on right now that I spent like 2 hours this morning figuring out this technology, and here we are.
I'm really glad. All my friends know that no one would have assigned me the task of figuring out technology. I can add and subtract really well, but I'm not in charge of IT.
You really know how to put work on me, don't you, Libby? I'll tell you. Well, I figured it out after a lot of cursing and frustration. So, but I think this is important because everyone's sitting at home right now, and you and I were talking yesterday, and what we've been kind of going on about this for days and weeks, which is there's tons of questions and concerns about the real estate market. Obviously, everyone's concerned about financial markets because those things are going up and down double digits every day. And it's had a couple of days of a good run, but right now it's sort of uncertain each day what's going to happen. But real estate and the mortgage world has sort of been off to the side, probably in the news a little more. There's a lot of speculation of, well, will this hit the real estate market? Some of these major losses that the financial markets have seen, A, and then B, you've been flooded with calls and questions because rates recently had some really historic lows. And I've been lucky to get you on the phone. I've been blessed and privileged when I've been able to get you over anything but text. So I know you've been busy, but I was hoping that I could ask you and just interview you about a few of the key things that people are wondering. And then I wanted to just let you kind of roll with this because you're super intellectual and knowledgeable about markets. And I think you have so much to add in this category. So I'll start by saying, tell me, sitting where you're at from a mortgage perspective, and I'll back up and say, tell me a little bit about you and your bio, and then give me sort of the lay of the land of the mortgage world right now.
Okay. So I work for Movement Mortgage. That's all we do is mortgages. We're not a depository institution. And it's an awesome company. We're super philanthropic. And so we have a farm in Uganda. We have 2 charter schools in lower income areas in Charlotte. And we do mortgages. So it's a great place to be. And our operations staff, which are the folks that actually help us process the loans that we have in the pipeline, which right now it's this huge monster of a pipeline based on kind of where the rates have gone in the last several weeks. And those folks are stellar. So my background's actually more on the risk transfer side for like corporate America. I worked for a real estate investment trust prior to this. And so now I'm on the consumer side and residential finance. So it's different, interesting, harder, nonstop as real estate is. And yeah, so mortgages, I'll just jump in if you're ready and just hit on some fine points.
Jump right in. Water's warm.
They're so sexy. Mortgages are so cool and so sexy. No, but it's an interesting world we live in right now. So everybody has heard about what the Fed has been doing I got probably 100 calls in a 24-hour period when the Fed first cut the Fed funds rate, basically down to zero, or it ranged between 0 and a quarter percent. And that has really not much to do with mortgage rates. That is the rate that the Fed loans money to banks. And so essentially, small business administration loans like that, banks borrowing money are paying, next to nothing in interest for that money. But what the Fed has done on the MBS side is having an effect on mortgage rates. And what I'll tell you is, it's volatile out there. We've all seen drops in our equity portfolios in the stock market. And so the Fed has stepped in, I think, surmising just to try to stabilize things. Obviously, the world markets, the economy has taken a hit because of this virus and because of fears associated with the virus. So what the Fed has done, obviously now, as of today, has passed this $2 trillion stimulus package,
Yeah.
Which is good, right?
That's what Trump would say. It's a huge package.
Huge. There it is. So yeah,
biggest stimulus you've ever seen.
It is, and you know what? It's necessary and important, but we have to pay for that. So how do we pay for that? We pay for that by essentially printing money or issuing bonds. The Fed is also at the same time doing this quantitative easing, which means they're buying back those bonds. And so for lenders right now, it's interesting. We're not going to know the impact of all of this on the lending side for quite a while. So I'll kind of keep my mouth shut about that. But what I'll tell you is that the Fed's trying to stabilize things. And so that's why they're doing that on the bond side, keeping the bond prices high. The first day they started issuing the bonds, this is the whole supply and demand thing. You issue a bunch of bonds, when you have a lot of something and not enough demand, the price goes down. So last week, after 3 or 4 weeks of interest rates being really low, last week they jumped up. We were probably, half a point higher than we had been. Things flattened out and stabilized a little bit. There was an auction last week that was well received. So bond prices are actually trading really well right now. And look, the stimulus package is going to, extend unemployment benefits. It's going to support small businesses who keep their employees on. And so in this time, I would say it's necessary. Interest rates are still low, but the lending community has changed because of the absorption of all this volume. I'm hearing stories from friends at other lenders where they're not taking any refinances right now. You've got this huge, ginormous pipeline working its way through the mortgage industry. Appraisers are taking 10 days because they're flooded. Title companies are behind. And so we've got to work through this volume, hopefully still seeing purchase business with the spring market and summer market. So it's wild.
I heard that conforming appraisals today, though, are going to be allowed to do drive-bys, which is essentially a loan 510 or less between now and May 31st. That was a Fannie Freddie guideline. So that's going to, I think, probably help accelerate or hopefully alleviate those lead times a little bit, right?
That's right. And, Fannie and Freddie will grant appraisal waivers. And so I'm seeing a lot of that from my clients. I would say if you've got, 10 to 20% equity, it's random, but we're getting appraisal waivers. And so, yeah, that'll help with trying to swallow the volume.
Now, let me just sum this up, what you just said, because you're way smarter than me. Okay.
Stop.
And when it comes to the Fed rate, I know that a lot of people last week thought that the Fed rate goes to zero. That means that interest rates are going to drop. So for all the listeners out there that are wondering, or watchers, I'm used to podcasting, so it's always listeners. For everybody out there that's watching, that doesn't necessarily mean you're going to get the best rate ever. They don't necessarily correlate. The mortgage rates are dictated in many things by the Fed rate in terms of where they can go, but they don't necessarily go the same way, right?
Right. Yeah. I mean, it's really about what's happening with the mortgage-backed securities and the pricing there. However, I'll tell you that because the Fed has stepped in and, excuse my language here, but kind of jacked around with everything, there used to be there used to be a fairly inverse relationship with what happened with the equity market and the bond market, right? So if if there was some bad news, whatever it was. I mean, sometimes it's been a Trump tweet, right, that kind of rocks stocks. Well, you could count on bonds rallying that day, and if bond prices go up, mortgage rates go down. However, because of what the Fed has done on so many different fronts, trying to stabilize the markets, the Treasury, the bonds, and the equities, there's not the same inverse relationships that there used to be. So it's been, a bit of a challenge for us on the mortgage side to predict, because ultimately that's what we're trying to do. We're using data. We're watching the markets. When we have a purchase contract or a refi, our clients are relying on us to watch and advise them the best day to lock.
You're day trading their rate, basically. You're trying to figure out when do you buy, when do you sell. I mean, it's the same. It's essentially becoming the same thing. I found in the past that locking rates was a way simpler process, but it's become so volatile. You kind of are playing this guessing game more than I've ever seen.
It's fun. Yeah, but you're right. I mean, and ultimately I'm fairly risk averse. And so if we're seeing a day where bond prices are good and lenders are in a position to reprice for the better, which means rates go down, that's where I'm calling my clients, or I've already kind of had the discussion and they've given me proxy. If we let's sit our ceilings here, let's set our floor here, and if we can get as low as we can, you've got the proxy to go ahead and lock.
What happens when the ceiling hits the floor?
You get low. I don't know.
All right. Well, I think the bottom line is nobody can guess in time markets. You can only use your best guess based on the knowledge that you have. So would you give any recommendation to somebody that's either doing a purchase or a refi right now, how you would treat their lock? Would you recommend that they go straight for a lock, or do you think that they need to sort of play that out?
I mean, this week I would advise unlocking. It kind of depends on the term of the contract. If it's new construction,
Right.
the longer the lock. So what happens is there's also swaps going on, right, for lenders. When lenders lock a loan before it closes, they're basically telling the client, we will, when the loan closes, you're borrowing money at this rate. But the lender is essentially floating during that time. And if bond prices change, lenders are also hedging. It's kind of complicated, but the point is that your loan might be locked by your lender, but the lender hasn't locked that cost of capital. And so on the back end of this, and you can do some reading on it, we can share an article that's quite interesting for anybody that likes data. But the point is that, you got to work with somebody who's watching things on your behalf. And I would tell you that bond prices are doing well this week. Rates are good. They're a lot better than they were last week. And if you're on a 30-day close, the sky's the limit with where rates can go. And I think we're really close to the floor with how low rates can get. So, I don't like to play Russian roulette. If I think I have a good interest rate, and
Never played.
right now we're in the mid to low threes on a conventional 30-year fixed, I would lock.
So let me ask you this, because we obviously see things as a real estate team at Compass. We see what happens in terms of what people are doing in our little world, but you're seeing a much bigger picture because you work with a lot of realtors at one time. Are you seeing people terminating contracts pretty consistently? Are you seeing sort of percentage of fallout? Or just give me your take on I mean, I have my take, but what's your take on the atmosphere that you're seeing with transactions right now?
I think that the serious buyer, the serious seller is more likely to move forward.
Yeah, I agree.
I have seen at least one termination on like a client for mine on the buy side. I saw a termination for one of my clients, their buyer on their sale, which didn't affect them moving forward. So, somebody that is trying to time the market, which is difficult to do when you're talking about a long-term investment like a home, a mortgage. Somebody who's trying to like day trade and get the best deal, maybe they have cold feet.
I lost you. Are you with me? Hello. Y'all may have to come back in just a second because Libby may have been lost here. I'm texting her. Libby, you are out of Zoom. Okay, folks, I'm going to attempt to bring Libby back. Can you see me? All right. Libby's going to log back in and then we're just going to keep going. She just noticed this. So had a little bit of a technical difficulty. This happens. It's our first live meeting on Facebook Live. She goes, this thing cut me off. I'm logging back in. Well, in the meantime, I think what she's seeing, which is exactly what our team is seeing, is that.
Gosh.
Libby, welcome back.
I'm so sorry. So I literally just lost total connection. So I went and plugged into directly to the line of internet.
You just left me to host my own show here, and I was totally unprepared for this. But hopefully everybody.
I'm glad we weren't live because my language was not as classy as.
Yeah, I gave people an alternative version of your text message as to what was happening. So now that we have you back, and you probably said a lot of things, right? After this was cut off. How much did you say?
I mean, I don't know. There was like maybe 1 or 2 4-letter words. I'm not sure.
Okay. Well,
Jesus.
in regards to what you were talking about, real estate transactions, I'm totally in agreement, which is that the serious people are the ones acting right now. And so we certainly see a reduction in the coming couple months of the number of transactions that will occur.
Well, and some of that is natural because people are more confined. I would say though, just real quick, that on the real estate side, I've seen some very professional and compelling video tours of homes.
Yeah.
So like if you're on the listing side and you've got a home, you've got a seller who's motivated and wants to get their property moved, then you use technology and you get creative and you stay in front of clients.
Yeah, I mean, I think that video is definitely going to be an option for some people. I still think most customers are not going to buy a home virtually. I think in some cases they may narrow their search with some virtual tours, but then they got to see that house. I have heard of a couple instances where people are doing that. I don't even know if I could bring myself to buy a house virtually, but there are people that can do it. And I actually have sold houses sight unseen before, even before this crisis. So, however, there is going to be a reduction in transactions because especially occupied homes, right? Where there's families living,
Totally.
Many of those people don't want others in their home right now, even if they're not there for the showing. And regardless of all of the safety precautions that we're taking as agents. And so there are people pausing. Vacant homes, I think, are easier to sell right now. Generally speaking, I've liked occupied homes because I had furniture, and a lot of times we'll stage vacant homes. But just in general, it's way easier to sell a house that's unoccupied at the moment. And new construction is something that I think people are less adverse to looking at because they know for a fact that it's not occupied, right? And one of the bigger things that we're seeing, I'm sort of interviewing myself now,
Love it,
is that people tend to be panicking about real estate value because they've seen the stock market, right? And we have to remind everybody that the stock market, we talked about this on Due Diligence, our podcast last week, is way more volatile and moves way more rapidly than real estate markets do. And historically, real estate moves in methodical directions and trends happen month by month by month. It might take 5 or 6 months to see a major trend in real estate, right? And many people also associate real estate and recessions, because our last recession was totally real estate driven, right? Because while you
Having
mortgage
more
people,
to do, well, yeah, right, exactly. Having more to do with the underlying security than than the real estate market itself.
right? So what I actually listened to a great interview with Lawrence Yun, who is the chief economist of the National Association of Realtors. He's a really smart guy. He's been with them for well over a decade. And he was talking about how historically in recessions, real estate has done quite well outside of the financial burst 10 years ago. For instance, the previous recession before that was 9/11, right? And real estate actually improved during that cycle when the markets were down. A lot of people will move their money and find real estate as a safe haven when markets are volatile. And that leads me to one other interview, which was the director of wealth management for UBS, their global director, who stated pretty confidently that things like gold and real estate are more of a safe haven right now to put your money, and not necessarily going to move in a volatile direction. In fact, many people believe that real estate won't really go down much at all. It may remain just fairly flat. And I heard one article refer to it as a pause. It may pause for 60, 90 days, but when it comes back, this is what we're telling people. If you want to get a good deal, right? A flat market sometimes does mean a discount, right? Because sellers are more motivated. They may just out of panic take a little bit of a lower offer rather than wait a week or two to see what else comes in. So even though the markets may not fall, you may get a better deal on a house if you meet the right person. And then on top of that, the interest rates, we've already talked about that. Interest rates alone represent good deals on real estate. The cost of real estate is about 10% lower per month than it was a year ago at this time. That's significant.
Totally.
And you've got to remember, when real estate comes back, I think it could be fairly explosive. One of the things that I heard in that interview from the guy interviewing Lawrence was that, hell, we're all going to be trapped in our homes for months. And it's going to be a reminder that the home is the safe place, right? It is the safe place in all of this. And people want to buy homes, and they may be trapped in their home for months and decide, I need to get out of here and need a change of scenery, right? And so a lot of people being in their homes for months on end, it's going to inspire them to make changes. And then you add the demand on top of that. We already had a housing shortage going into this crisis. So imagine you have a housing shortage, and then all of a sudden you have a pause and you have low interest rates. I think you could have this explosive spring-like market this fall. And I think that's a really educated guess. So if people want to wait this out and see, I kind of feel what's going to happen is it's going to be like my 2009, 2010 clients who were like, I just want to wait this out and see. And then 2012, 2013, they were like, damn, I wish I hadn't waited this out and seen, because you just can't time markets.
That's right.
Yeah. And if you could, we'll pay you to sit in a room and tell us what's going to happen, and we'll just make trades and get rich. Right?
That was a great.
Does that inspire you?
Yeah, no, it does totally. And I mean, here's the other thing is, and I hinge a lot on supply and demand. So if you're waiting this out, at least in our, like in some niche markets in Atlanta, especially in town, Buckhead, I've always watched the spring. A lot of people who want to sell their house in the spring, or the move up buyers who want to sell and then move into a new school district, or, private school letters go out, right, very soon. Hopefully they're still on track. But a lot of those people want to hit the market before those letters go out, so that's when the inventory is there, right? That's going to change a little bit this year. I don't know when those letters are going out, how, I don't know all that. But what I'll tell you is that then you've got a supply problem and you have a lot of demand. And so then the only question is, if you're somebody like me who's risk averse and you're hedging, if there's a house out there right now that you love and you want, and it's listed and the sellers are still motivated to sell, why are you waiting? Because then you're going to be competing with multiple offers. And I'm the type of person that I don't want to be in a bidding war. I'm not good at this, but I like to buy stuff on sale. So I'm just like,
You tried, but it rarely work.
Yeah. The shops I shop at, they probably mark it up and then tell me it's on sale. I don't know.
You know, David on our team, he's the king of buying and returning more than he buys. It is so funny. He'll buy 4 things and return 3 of them.
I mean, but then, well, that's buyer's remorse. I'm great at that as well. And it's also saving.
He's probably watching.
You're saving money, David. I
I
just
know. I got the high of the shopping experience, but I didn't actually spend the money.
That's right.
Well, I want to get away from numbers for a second because I want to ask you what the heck you're doing while you're trapped up there. You have this new amazing property in Roswell, which is just north of Atlanta. Most of you probably know that. And you've got this huge pond out behind your window. Is that right?
Oh, yes. So
Is it a lake or a pond?
I mean,
Have we decided?
If you're 7, it's the ocean. I mean, it's probably a pond.
Very metaphorical.
It is, but you know what? We have a friend of ours kayak over here, and we've got a little flat bottom boat. And so the kids, I mean, they get their life jackets and they tool around out there by themselves, and it's super peaceful to get out there. So that's fun. But I've got 3 boys and 3 dogs here.
How many acres is it?
6.
6 acres in Roswell.
And it's a 2-acre pond. There's a rope swing. We got our trampoline up. We've got the zip line is here, but it's not installed. So we're having fun. But we're homeschooling. And I will say the city of Atlanta, we're still technically in school at Morris Brandon and E. Rivers. And so APS, our teachers are absolutely incredible. So we're working full time. We've got huge pipelines, and we are homeschooling.
I know, it's so crazy because Lindsay on our team's homeschooling as well. It's basically 2 jobs for most parents at this moment. And I think that teachers are going to be more appreciated than ever when this is over, because a lot of times I think parents complain to teachers, and this might remind people of how challenging that job is, because you think teaching just your child is hard. Imagine multiplying them by 20 at one time, right?
Totally. The one thing that, so we've made this, I'll just say this real quick about me and the kids. We've kind of done this tried to do a thankful journey along the way, because they can get really annoyed and bored because they can't play with their friends. And I don't particularly love screen time. They have enough of it through this like homeschooling.
Yeah, right.
And so, especially when it's nice, I'm like, go outside. So we start this thankful journeys of what we're thankful for. And they're thankful for their teachers and their friends that they get to do Zoom meetings similar to this. And so one of the things I would say to encourage people is, there are some businesses out there that are hurting, and the service industry is hurting. And so we have reached out to some friends that we know that are in the service industry or that own restaurants. And I would say, order a meal and have it be ready to go for somebody that you care about. It is hard to homeschool and work full time and cook all these people in this house 3 right. meals a day. So if you want to do something kind to pass it on and love on someone, order a meal for a restaurant.
Libby, have you heard about our initiative, hashtag Wheelock Group Loves Atlanta?
I should have, but no.
Well, it's only a day old, so maybe 2 days. But that's exactly what it's about. So we've been posting and tagging various restaurants and places that we've spent a lot of time throughout Atlanta, calling for support to them. I know for me, the South African restaurant group of Yabo, 10 Degrees South, Biltong Bar, Justin Anthony owns those. And they are a place I've spent a lot of time the last few years enjoying either a beverage or a dinner. So I know that he had to lay off hundreds of people. And so buy a gift card from him. My friend, Virginia Brooks, who a lot of people don't think of this as a small local business, but Ruth's Chris Steakhouse in Atlanta, the matriarch of that is Virginia Brooks. She lives here in Garden Hills, and she has 40 Ruth's Chris throughout the Southeast. But this is the epicenter of her business, and she had to lay off 800 people last week. So I ordered Ruth's Chris Monday night. I don't usually order steak for takeout. Okay. In my normal life, people would be like, why are you doing this? Who are you? But I wanted to support her business. And my other the call to action is we're of course posting things that we love to participate in, but we're asking our clients, our friends, if you have a restaurant or a local business that's been shut down in the service industry as a result of this, allow us to repost and encourage people to support them. And yes, I do know that there are sanitation issues in people's minds when it comes to doing that. They're concerned, but you know what? I think that the plight that those folks are going through, fighting to keep those businesses open, way outweighs the risk. At least for me, I'm not going to speak for others, of getting ill. And the people that I order from, I trust. They run really great, sanitized restaurants and take precautions. So I want to make sure at least once or twice a week, and I would encourage everyone once or twice a week, order from your local restaurant, because if you don't, it may not be there.
That's right.
In 3 months. So not to get all preachy, but do it. But I was actually reflecting about this on the podcast because, I recorded an hour ago with Lee, and we were talking about how life in America has been redefined in a matter of days. Our entire life changed. And it was this incredible reminder, or it has been this incredible reminder, that we don't have control. In fact, if you can look up, Bill Gates wrote this sort of letter to all of us about what coronavirus means, what the lessons are from it. We can either gain lessons from it, or we can just move on and not, right? But it really is a reminder of, we just have all of these luxuries that we enjoy, whether it's going out to nice places, coming and going as we please in this free capitalistic society. And we're kind of trapped, and Americans don't like being told what to do. And we're kind of whiny about it. And we don't like being told, don't buy 50 rolls of toilet paper. And I mean, that's just a whole other subject, but
oh my gosh, the best meme ever was the one about the toilet paper.
Yeah. And he makes a lot of points. He made 2 or 3 references to toilet paper and how there's more important things than toilet paper. And let's not forget that. But life has been redefined. And I'm kind of curious what you've been up to, because I know that in the last couple of weeks, I've played Monopoly for the first time in over a decade. Who would have thought? It was actually this funny version from Target that was like Republicans versus Democrats Monopoly, except they didn't call it Republican Democrat Party. It's kind of funny. You check it out. And then we played this other board game at my friend Kurt, and of course David, my team member, lives 3 doors down. So it's been all this kind of interaction on a sort of, I guess, going back to our roots type of way, because you can't sit and watch TV all day, every day, and be on media when you're trapped at home. So in a weird way, it kind of gets you back to doing things that are not media driven. Totally. And then I see more people outside in my central area of my community than I do when we're not quarantined. Ironically, more people are outside and getting a level of exercise. I think most people. So it's just so weird or fascinating to think about how that happened so rapidly,
Well, and obviously I don't need to get too involved in religious discussions with this forum, but what I would say is that it is just super interesting. It's like, maybe a little earth shaking, shattering for people. And maybe we needed it, maybe we need to focus on what's really important. So I actually love it.
Worse.
Yeah, I love it. I love having the kids home. I love it all. I love being quarantined. I think as the older I get, the more I'm like a homebody. But I have to ask you, I've seen some awesome posts for people that live in like townhome or, there's a community in Inman Park. I have a friend over there, and they do the social distancing happy hour where everybody's outside and you're like 6 feet away and everybody has a cocktail. Can you start?
You're asking me if we've been doing this?
Yes, I'll sponsor it. Do I need to sponsor it? That sounds amazing.
We definitely last Friday had this social distance happy hour in the central area. My townhome has these buildings that sort of surround this almost courtyard, like circular area with mailbox and green space. And so everybody's out there. And I think it's been outside. There hasn't been anything more formalized than that. But what I can say is everyone's just kind of going outside, sitting on their front steps, watching their dogs. It's a way more interactive neighborhood. And when you live in the city, Generally people are kind of busy and coming and going quickly, and you say hi. I mean, it's a friendly neighborhood, no doubt. I'm at the Towns of Chastain. And but now it just feels more like a community all of a sudden, because you don't have anyone else to talk to. You don't have anywhere else to go. I don't really want to go around my parents because they're older. So I don't, even though I think they could use companionship, I don't think it really works to their benefit right now for us to come around them. Which has been funny because my mom is basically so rebellious about this until the last few days. And now she kind of gets it, but I'm like, Mom, do not go out. Okay. But it is fun to a degree. And I hope that we kind of take this, take some lessons from this and sort of reel it back a notch and work and getting up early in the morning and exiting our homes and where we live is sort of an art in US culture, right? We get up to go and then we come back at the end of it all, and we spend very little of our waking hours where we live. And so I think that can be bad because in many ways, our culture's lost a sense of the home or family unit or being a part of community. And maybe this is a little bit of a reminder to reorganize our priorities, maybe have that game night, maybe do a little more from home or take a half day here or there. It's a little more of a European or Latino approach in those countries. They pretty much have been doing this for years. They're like, come on, guys, join up, work from home and take a nap at 1 p.m. But it's crazy. But then all of a sudden, and then there's like the fact that I really wish there was some sports on, because I was fascinated how this is the first time since World War II that sports has been canceled. I always thought those stories were going to be something for the history books, right? When my grandmother told me about when there was no baseball or whatnot.
Right.
And history can repeat itself.
It promises to.
So I know that was a lot there, but I just
thoughts from Jason Wheelock.
There's a lot of reflection that comes when you're, trapped at home.
I love it.
What if we didn't have Zoom though? And what if we didn't have Facebook? You imagine how horrible this would be?
We'd be on your phone nonstop trying to figure out what everyone else
is doing. That's true.
Fun.
Well, I know you got to balance because you've got a family and 3 kids running around probably, although they've got 6 acres to escape to. Any final thoughts? I think we should do this again.
Totally.
Totally.
I would love to. We'll have to do a market check-in in 2 weeks. I mean, I would just say we're gonna learn a lot in the next 7 to 10 days. They're obviously testing a vaccine right now, and they say I think by next Wednesday we will know the results of how that vaccine is having an effect on the virus. And if I was a betting person, I would say that this is going to be a quick blip on the radar. And other than the temporary hit to our retirement accounts via the stocks, I think this will be a moment where we look back and actually think, wow, it was fun. It was like camping.
Right. I think there's going to be some really great stories in the coming months. When we all get back out in the world, we're going to be like, remember that one time, But I think this is great. And I want to encourage everybody out there who's been watching live. Most of you probably tuned in at certain points or another. If you have questions that you would like us to answer or talk about, I love a forum and I love answering questions. I know you do too, Libby. You're a junkie like I am for information. So send us questions. You can to our inbox at the Wheelock Group at info@wheelockgroup.com. And if you address it and it doesn't get exactly to me, it will get to me one way or another. You can always DM us on the page or visit us at wheelockgroup.com. Basically, if you can't find us, I don't know what to say. Libby, if they want to talk to you in the short term, ask you mortgage questions, what is the best way to reach you right now?
They can do Facebook Messenger. They can Google my name at Movement Mortgage and it'll come up, and my cell phone is right there and my email address. And I know that you know how to find me, so they can always click on the page and then send you the note and then you'll track me down.
Awesome. All right, everybody, enjoy this beautiful evening. I think it's well over 70 degrees outside, and just stay 6 feet away from whoever you see. And we'll do this again soon. Thanks, Libby.
Thank you. See you later.